Today, we're diving deep into one of the most underrated yet fundamental projects in the crypto space, Render Network. While everyone's been obsessing over AI agents and meme coins, Render has been quietly building the infrastructure that powers the digital world that we live in. Currently trading at $2.99, Render has had an incredible journey, surging over 1,000% in 2024 before completing one of the most significant blockchain migrations in crypto history. This isn't just another DeFi protocol or NFT project. This is the decentralized backbone for 3D rendering, AI processing, and the entire creator economy. Let's break down why Render could be one of the most important infrastructure plays in crypto. So, what exactly is the Render Network? The Render Network is a decentralized peer-to-peer GPU rendering platform that connects artists and developers who need rendering power with individuals who have idle GPUs to spare. Think of it as the Airbnb for computer graphics processing. Founded in 2017 by Jules Urbuch, Render Network addresses a massive problem in the creative industry. High-quality 3D rendering, whether for movies, games, architectural visualization, or AI training, requires enormous computational power. Traditionally, studios either had to invest millions in their own render farms or pay premium prices to centralized cloud providers. Render Network flips this model on its head. Instead of relying on expensive data centers, it harnesses the collective power of thousands of individual GPUs worldwide. Node operators, who are everyday people with gaming rigs or mining setups, can contribute their unused GPU power to the network and earn render tokens in return. Here's how it works. Creators upload their 3D scenes or AI training jobs to the network. The system automatically distributes these jobs across available GPUs based on their capability tier. Once the rendering is complete, the results are verified through a proof of render mechanism, ensuring quality and preventing fraud. Creators pay in render tokens, which are distributed to the node operators who completed the work. The technical architecture behind Render Network is fascinating and demonstrates why this project has staying power beyond just the market hype. The platform operates on a sophisticated tiering system that categorizes node operators based on their GPU capabilities. Currently, there are multiple tiers ranging from basic consumer GPUs to enterprise-grade hardware. The network is also developing a trusted partners tier for highest-end rendering capabilities. What sets Render apart is its integration with industry-standard software. The network seamlessly works with Octane Render, Redshift, Blender Cycles, and now incorporates the latest generative AI imaging tools from Runway, Black Forest Labs, Luma Labs, and Stability 8. This isn't just some experimental blockchain project, it's being used by real studios for real production work. The pricing mechanism is equally sophisticated. The network uses something called Octabench to determine the computational requirements for each job and price it accordingly. This ensures fair compensation for node operators while keeping costs competitive for creators. One of the most innovative features is the burn and mint equilibrium model, implemented through community governments. This mechanism helps balance token supply and demand, potentially creating deflationary pressure when network usage is high. Perhaps the most significant development in Render's history was its migration from Ethereum to Solana, completed in 2024. Now, this wasn't just a simple token swap, it was a complete infrastructure overhaul that demonstrates the team's commitment to scalability and efficiency. Going back further to March 2023, the Render community voted on RNP002, Layer 1 network expansion, to upgrade from Render on Ethereum to Render on Solana. The migration was driven by Ethereum's high gas fees and slow transaction times, which were becoming a bottleneck for the network's growth. Solana was chosen for its ability to handle high transaction volumes at a fraction of the cost, crucial for a platform that processes thousands of microtransactions between creators and node operators. The migration was executed flawlessly using the wormhole protocol, with a 1-to-1 token swap ratio and a generous incentive program, offering 1.14 million render tokens to cover migration costs. The results speak for themselves. Since migrating to Solana, Render Network has seen increased adoption, lower transaction costs, and the ability to integrate with Solana's growing ecosystem of DeFi and AI projects. This migration positions Render perfectly for the next phase of growth in the decentralized computing space. What really validates Render Network's potential is the caliber of partnerships and real-world adoption it has already achieved. This isn't vaporware, it's being used by major productions and industry leaders. In March 2024, Stability AI, Otoy, Endeavor, and Render Network announced a groundbreaking partnership to develop next-generation AI models, IP rights systems, and open standards powered by decentralized GPU computing. This collaboration includes the launch of stable 3D videos and leverages Render's decentralized GPU platform for AI model training and inference. The Render Advisory Board reads like a who's who of entertainment industry. Eri Emanuel, the co-CEO of WMA, J.J. Abrams, chairman and CEO of Bad Robot Productions, Brendan Ike, founder of Brave Software, Ahmed Mustak, founder of Stability AI, and digital artist Beeple. These aren't just token advisors. They're actively using the platform for real projects, and Render has already been used for major productions including the virtual reality experience for Batman the Animated Series and the opening titles for Westworld. The network processes everything from basic 3D visualizations to complex AI training workloads for machine learning companies. The platform's integration with leading 3D software and AI tools means it's positioned at the intersection of multiple growing markets: the creator economy, the AI boom, and the metaverse build-out. So let's talk numbers. Render currently has a circulating supply of about 517 million tokens out of a total supply of 532 million. The tokenomics are designed to create sustainable incentives for all network participants. The token serves multiple functions. It's the payment method for rendering services, the reward mechanism for node operators, and the governance token for network decisions. Node operators earn render tokens based on the complexity and duration of jobs they complete, while creators pay in render to access the network's computational power. Render's price performance has been impressive but volatile. The token surge of 1,000% in 2024, reaching an all-time high in March before the migration to Solana, and now currently trading around $2.99, it's down from those peaks, but still up significantly from its historical lows. What's interesting is the network's deflationary mechanism. As network usage increases, tokens are burned through the burn and mint equilibrium model, potentially reducing supply and supporting price appreciation. However, the network also has a monthly inflation of around 760,000 render tokens to incentivize participation. Key metric to watch isn't just the price, it's the network utilization. As more creators use the platform and more node operators join, the token economics become more robust and sustainable. The explosive growth in AI has created unprecedented demand for GPU computing power, and Render is perfectly positioned to capitalize on this trend. NVIDIA's revenue surged 126% in fiscal 2024, and analysts expect another 98% growth in fiscal 2025, largely driven by AI demand. This GPU shortage has made it prohibitively expensive for smaller developers and researchers to access the computing power they need for AI training and inference. Render Network provides a cost-effective alternative by aggregating idle GPU power from gamers, miners, and other node operators worldwide. Therefore, the timing couldn't be better, and according to Grand View Research, the global AI market could expand at a compound annual growth rate of 36.6% from 2024 to 2030. And as this market grows, the demand for accessible, affordable GPU compute will only increase. What's particularly exciting is Render's integration with AI tools like Stable Diffusion and other generative AI models. This positions the network not just as infrastructure for traditional 3D rendering, but as a key player in the AI training and inference market. Partnership with Stability AI is particularly significant here too, as it demonstrates how Render can support both the training of new AI models and their deployment for creative applications. So, what's the outlook for Render? The predictions are cautiously optimistic across the board, with most analysts focusing on the fundamental growth drivers rather than speculative price targets. For 2025, price predictions range from $8 to $12, with some analysts targeting the higher end of that range. DCN's technical analysis suggests Render could reach $9 by the end of 2025, while other sources point to a potential target of $11 to $12 based on network growth and AI market expansion. The bull case for Render is compelling. Continued growth in AI demand, expansion of the creator economy, metaverse development, and the cost advantages of decentralized computing over centralized alternatives. The network's position on Solana also provides access to that ecosystem's growing DeFi and AI infrastructure. However, there are risks to consider too. NVIDIA's GPU prices won't stay elevated forever, and a supply glut could make local GPU processing more attractive than decentralized alternatives. The decentralized compute space is heating up, with projects like Internet Computer, Akash Network, and others vying for their market share. However, Render's focus on GPU-intensive tasks and its established partnerships give it a significant moat. The biggest challenge comes from traditional cloud providers. Amazon Web Services, Google Cloud, and Microsoft Azure all offer GPU computing services, and they have the scale and enterprise relationships that startups can't currently match. However, Render's cost advantage and community-driven approach appeal to independent creators and smaller developers who are simply priced out of enterprise solutions. NVIDIA's own partnerships and ecosystem development also present both opportunities and challenges. Whilst NVIDIA's growth validates the market need, the company's direct relationships with cloud providers could potentially bypass decentralized networks like Render. The key differentiator is Render's integration with creative software and AI tools. Rather than being just a generic compute platform, Render has built specific workflows and partnerships that make it the go-to choice for certain use cases in 3D rendering and AI inference. The network's governance model also allows it to adapt quickly to market changes, as demonstrated by the successful migration to Solana and the implementation of new features based on community feedback. If you're considering Render as an investment, here are the key factors to evaluate. The bull case: it is a growing AI market, established partnerships and real-world usage, strong technical team, successful blockchain migration, and it's positioned in multiple growth markets covering AI, gaming, and metaverse, along with sustainable tokenomics. The bear case: competition from tech giants, potential GPU price normalization, network effect challenges, and the speculative nature of crypto markets. So for risk management, Render is still a speculative play in an emerging market, and whilst the fundamentals are strong, crypto volatility means you should only invest what you can afford to lose, and dollar cost averaging might be a better strategy than trying to time the market. In terms of the key metrics to watch, the network utilization rates, number of active nodes, partnerships with major studios or AI companies, and integration with new software platforms are the key metrics. These fundamentals matter more than short-term price movements. And remember, this is infrastructure technology with real utility, not just a speculative token, and the long-term value will be driven by actual network usage and adoption, and not just trading speculation. So, to conclude, Render Network represents one of the most compelling infrastructure plays in crypto, and quietly building the foundational layer that powers the digital content creation industry. The migration to Solana positions them perfectly for the next phase of their growth, and their partnerships with major players validate the technology. The AI boom provides a massive tailwind for GPU compute demand. Is this a guaranteed winner? No investment is. But if you believe in the long-term growth of AI, the creator economy, and decentralized infrastructure, then Render deserves serious consideration in your portfolio. The question isn't whether we'll need more GPU compute power, because we absolutely will. The question is whether decentralized networks like Render can capture meaningful market share from traditional providers. Based on what we've seen so far, I'd say the odds are pretty good. So, what do you think? Is Render the future of decentralized computing? Let me know in the comments below, and don't forget to like this video if it helped you to understand Render just a little bit better. Subscribe for more crypto deep dives, and if you're looking for content on trading analysis, macroeconomics, or potentially some podcasts, then check out the other content creators on Coin Compass, and we'll see you in the next episode.